Today we're going to consider what is more important than a structure. Now, if we take a look at what the price structure is doing with us right now, the simple coordination is that this is the high, this is the low, this is the higher high, this is the higher low. So we're moving up, right? But then what happens over here is the change of the character, right? We're saying that we didn't get the new low, but we get a lower high. So, we couldn't reach the previous high. But then we again making a lower low to compare with the previous. Now, from this very position, what direction you may say the trend is going? Is that going up or is it going down? From this very situation, we're seeing that there was a break of structure right here. Then we have another break of structure over here, and even lower break of structure right over here. So the conclusion is we're going down. Right over here, while it was a live streaming and I was on a live support on one of the Mondays, I said, okay, if we're going to make this break of structure, then we're going to go significantly higher than this high and the previous high. And everybody were like, why so? Because structure looks like now reversing and we're going down. And that's exactly my point. If we don't understand the whole idea behind this cycle, price cycle, then we will go with a very simplistic way. Yeah, the structure is going down, we're going to go lower. Of course, we will go lower, significantly lower. Lower than this low, lower than this low, and the even previous low over here. We will go significantly lower. And that's what I said during the development of this very structure. And that is the key point. My point is I'm not only consider on a historical structures, which is easy to configure and say what's happening, but while this very structure developing in real time, I said the price now, I can expect the price will go higher than this high and maybe even slightly higher than this high. And everybody were like, so surprised. Now, let's see what happens next. Boom, the price went not directly, but it went higher, climbing higher and climbing higher until we reach this very break of structure. This is the break of structure toward the top. Now, one of the biggest problem for people is this is the break of structure or this is just a liquidity grab. Now, let me tell you guys that there is two views, and I'm going to add my own view, and I explain you from a different perspective. So there's a two view about this break of structure. If this break of structure happens just with a candle wick or the tail, then it's just liquidity grab. If this break happens with the full body candle, like this one, it's small, but it's a full body candle, then it is, and especially this one, you see one body candle, pierce it through this break, made a break of structure, and then there's a small candle, and then there's a full candle, went even higher. Now, is that count as a break of structure? The other people may say, oh yeah, it's not just a wick or a tail of the candle. Yeah, it looks like a complete break of structure. What I'm expecting is much more than just how we broke the structure. Okay, again, there is a few videos that explain you the way we broke the structure defines if this is the liquidity grab. It's actually we broke the structure and we're moving significantly higher. Now, I have a different view, and I don't recommend you to mingle between how we broke the structure by the candle or by the wick of the candle. There's another view that we need to think about what was the goal. What was the goal for all of this construction, all of this schematic? Because this is the very clear schematic. When we take a look at the Vaikov schematic and we understand that price have a goal in mind, and there is only two reasons for price to move. One, build liquidity, and second, grab liquidity. Now, At this very point, I said, hey, price will be interested to go higher than the previous high, because it's interested to grab all of that liquidity. This is the liquidity grab, even though some people say, oh, wow, this is with a full booty candles. Yes, exactly, because we need to think about the price cycles that is above the structure. The goal that price have in mind to complete the cycle, to complete the what wasn't yet achieved. There is a objective that price tried to achieve, building liquidity between these highs and lows, and grabbing liquidity on one side, and then we'll grab liquidity on another side. This is only two simple goals that price have in mind, and that's what defined the price cycle. In this particular schematics, there is a price cycle that we need to complete. Usually, if you take a look at the gold, you look at the Dixie, you look at the index, dollar index, or you look at the like a euro, a US dollar, you will see that price love to come before it will go in a true direction down, because after this break, and this break, it was absolutely clear that the price will go lower. But before the price go lower, it's love to go into the fourth phase of the Wyckoff structure, Wyckoff schematics, go and grab their liquidity above the previous highs. It's simply love it, because it's going to be a waste of energy to build all of this internal structure and not to grab liquidity, not to grab the stops that easily convert into the opposite direction trades. Okay, now the price went up. Now we're seeing, because we have the indicators from level 2, we're seeing that there's like about 200 contracts sitting here. You see, there's not too much distance between this 207 contracts sitting here, about 200 something contracts sitting right here. So we just get into this first red line, significant to above 200 limit orders here. And then what happens next? Look, guys, we build a liquidity on our way up. Where is this liquidity? Most of you already seeing it and know that this is the reason that price now interested to collect this liquidity, because it's already achieved all the reasoning to go higher and grab liquidity on that side. Now there's nothing to do. Now, after we accumulated all of this liquidity, now we're going to go and collect liquidity on our way down. So when it's planning to go down, it's build liquidity on the way up so it can slide down. You see that? Again, the price needed to go down, but on a way climbing up, it builds liquidity. All of this like low, higher low, higher low, higher low, higher low, higher low. There are a bunch of traders who put their entrances right below this line. Now, this is the channel and going up. It's a very clear channel. When it's become a very clear channel, the only reason for the channel to being built to break the channel, right? Now the price went up, hit this limit order 200, and now what happens? The price shoots down, and it shoots down significantly. What is the main reason for me to talk about? If we believe in a structure only, then we will wonder why the structure is going up. Then it's kind of start going down over here. Then immediately it went up significantly. So we change our mind. The trend is going up now. But if we don't understand the reversal schematics, and all phases of this reversal schematics right here present on this very chart, you can do it like phase 1, phase 2, phase 3, and this is the phase 4. Now, when the price achieved its goal over here, it's completed this life cycle, the price cycle, and there's nothing to do over here. When price is completed the cycle, what price tried to achieve, the goal in mind of the price maker, and the price maker manipulates both of the sides to achieve its goal. Now the price achieved its goal by grabbing liquidity from here, and now it just like shoots down. Okay, you see this? New low. It's just like unbelievable. If you don't understand the reversal pattern structure, that means you will wonder why the price from here it's moving higher than this previous high. There's no explanation. From a simple perspective of the structure, if you build highs and lows and highs and low, this game going down and then going significantly up and grabbing something on the left is not explained by only structure. When we understand the cycle that is completed here, we understand that the price will go lower. It is absolutely clear reversing pattern. While we were on a live stream, from this point, I'm expecting that price will go higher. That means I never will be entering into the position right here, or right here, or right here. This is the most dangerous spot to trade because price is building and collecting liquidity. This range is the most dangerous to enter into any direction, even right over here. I said to myself, now you will have a better position to enter into the short. And the best position to enter is at the end of the price cycle.